Are you frustrated feeling that buying a home is only for wealthy people, or maybe people that have an enormous amount of income that they can put 20% or even more money down towards buying their first home? Well, in this video, I'm going to be talking about how you can purchase a home with lower income and still be able to purchase and become a homeowner today. There's many myths out there when it comes to home buying. Many times people think that you have to have a large income, you have to put 20% down, you have to have perfect credit in order to buy, but all those things are false. And in lending, there's many programs that are out there that are literally geared to helping first-time home buyers. And even those with maybe lower credit scores, or you're not even making a whole lot of money, that you could still purchase a home today. You just have to be a little more resourceful and get with the right lender, because a good lender is going to have resources and access to some of these programs like down payment assistance loans that they can actually get you into a home today. When it comes to qualifying for a mortgage, there isn't a necessary minimum amount of income that you need to make. Whatever income you make is what a lender is going to go off of. And the reason why I say that is sometimes people ask, hey, do I need to make at least $4,000 a month to buy a house? The answer is it depends, because if you had two borrowers that were literally making the same amount of money, one may have a car loan, student loans, credit cards, their debt to income ratio could be well over 50%. That guy is probably not going to get a loan today. Now the other guy, let's say he's making the same $4,000 a month, but let's say he doesn't have a car loan. Let's say he doesn't have student loans and he's got maybe a couple of credit cards. That guy has a higher chance of getting approved than borrower number one. So a lot of times, if you're watching this video and you're doing your own research online, trying to look up how to calculate your own debt to income ratio, I always suggest getting with a lender. We don't charge anything to do a pre-approval. Getting with a lender is probably the most important thing, because you can let the professional really figure out what you can and can't qualify for. So many people feel that, again, you need to make, $5,000, $6,000, $10,000 a month. I've had clients that literally have made six figures that could not qualify for a mortgage. Just because you're not making a lot of money, don't feel that buying a home is impossible. Because if you're retired, you could be on Social Security, you could be on a pension, but guess what? If you have no debt, you could purchase a home today. It's definitely doable. Now, let's say you want to pick up a second job. This is something a lot of people think about doing when purchasing a home. And if you're going to do that, just remember the rule of thumb in lending is 2 years. So if you pick up a second job, you need to be at that job for at least 2 years to show the underwriter that you have a history of working those two jobs. Now, sometimes people do that and then they end up quitting in the future once they get into your house. That's totally up to you. But you have to have that 2-year history in order for us to count that part-time job, or maybe you're working 2 full-time jobs in order to purchase a home. So just remember, when a lender is looking to qualify you for a mortgage, whether we get you approved or you're not approved, it's not going to come down solely based on a credit score or your income. We have to look at the entire file. Like I've mentioned in some of my other videos, we need the credit, the down payment, the income, the debt that's on your credit report, plus the new mortgage. We have to look at everything to make sure that you can qualify to purchase a property. So don't feel that just because you're not making a lot of money, or maybe your friends or family members are making a lot more and they bought a house, that you feel it's out of your reach. Totally not the case. You may not be able to purchase as big of a house as they are, but there's still opportunities for you to look at maybe purchasing a condo or maybe even a townhome. Because remember, buying a house, your first home may not be your dream house. Sometimes you have to purchase that first home in order to build some equity. I've had a lot of clients that have purchased properties that over the years, they've been able to accumulate $40,000, $50,000, even $100,000 of equity, that when they sell that property, they now use those funds to purchase their dream home. So don't get discouraged because of your income. Don't get discouraged if you don't got 20% down to buy a house. There's so many resources that are out there. I definitely recommend finding an excellent lender wherever you're thinking of buying, anywhere in the country. The lender is the most important part. If they're resourceful enough, they'll be able to help you get qualified and become a homeowner. So I hope these tips help you with your home search and your qualifications. And of course, if you guys ever need a second opinion or you want us to take a look at your approval, send me an email. I'd be happy to do that for you guys. And I appreciate you sharing the video. And of course, hit the bell so every time we drop new videos, you get notified. And I'll see you on the next one.